As we continue to monitor both the markets and COVID-19, you're going to hear from me at least weekly as I'm going to do my best to keep you updated with all this news. Now, before I do, today was another horrible day for the market when it was down around 10% at its peak. Looking back, I'm very happy that we decided to allocate 40% of most of the Trajan portfolios to Treasuries. The yield on these treasuries are around 1 to 1.5%. I know it pales in comparison to some of the losses, but it's a heck of a lot better than riding this roller coaster. Now, keep in mind that the vast majority of you are not all in the stock market and are invested according to your risk tolerance, which may ultimately be very conservative. So when I say the market was down 10%, that may mean significantly less for you. Now, unfortunately, being conservative right now doesn't mean that you aren't prone to losses. Now, I understand that it's very easy to become disappointed, saddened, or even downright angry at times like these. I get it. Depending on when you started investing, you may be back to your initial investment or worse. I know that most of you have seen this in 2008, but because we're 10 years older and wiser, we certainly don't want to see it again, especially in our lifetimes. Unfortunately, here it is. We've taken a lot of calls from clients who used annuities to diversify their portfolios and asking if they're subject to the market downturns. And the answer to that is no. The annuities Trajan uses are not affected by stock market decreases. The annuities that we use are tied to an index and only increase when the market increases, but are not subject to the losses. So I want you to know that. There are also a lot of annuities that have up to a 20% upfront bonus and up to a 10% guaranteed growth per year. So for some of you, this may be a good way to offset some of the losses, assuming that you want income at some point in the future. So for more information on annuities or any investments for that matter, simply contact us at 1-800-838-3079. That's 1-800-838-3079, or click the link in this post. Now, in the meantime, we need to keep coronavirus in some sort of perspective. According to the CDC, as of today, March 18th, there are a total of just over 7,000 cases in the US with under 100 deaths. I think the number is 97 deaths. That's just over 1%. Even when taking the current estimated global mortality rate, which is just over 3% at face value, COVID-19 looks more like a seasonal flu more than anything. Severe SARS killed about 10% of the people who got it, while MERS was even deadlier, killing 34% of patients. At least so far, COVID-19 seems to be at best comparable to the season flu. We don't know that for sure yet. Obviously, data is still coming out. Now, unfortunately, no one knows what's going to happen day to day, and this may certainly get worse before it gets better. There are some signals that the market bottomed out, however, but again, time will tell. Especially as they start testing people, which sounds like it'll start to happen within the next week or so. Keep in mind, the more you make, the more we make. And that's why it's important for us to not only grow your portfolio, but keep it safe in times like this. Now is not the time to stick your head in the sand. Now is the time to be proactive and take charge of your money. So we're still working and ready to answer the phone call. Give us a call if you have questions.